The Bank of Canada is expected to hold interest rates steady at 2.75. But what does this mean for you, especially if you're considering to buy a home in 2025? Well, let's break it down. I'm Adam Walker, your friend in the mortgage business here in Norfolk County. And today we're diving into the Bank of Canada's upcoming rate decision and what it means for prospective homebuyers. We'll also clarify some of the difference between fixed, variable, and adjustable rate mortgages to help you make informed decisions. This Wednesday, the Bank of Canada is expected to keep its key interest rate at 2.75, setting stronger than expected economic growth within the first quarter of 2025. According to a recent study, over 75% of economists are anticipating this move, aligning with futures and market trends. Douglas Porter, a chief economist at BMO Capital Markets, noted the overall GDP numbers have been surprisingly resilient. While the economy is certainly not as strong as headlines suggest, the reality is it's managed to grind out some modest growth. Now, it's important to understand that this decision, it really only affects those variable rate and adjustable rate mortgages. But before we get into those, let's clarify the differences. Now, the first one, let's remember fixed rate mortgages. This doesn't affect them at all. Those are impacted by bond yields. If you have a fixed rate mortgage, your interest rate remains the same throughout the term, whether it's a 3-year, 5-year, 7-year, or etc. This provides stability in your payments. It's almost essential for first-time homebuyers who want to know exactly what their payment's going to be over a term. The next one is a variable rate mortgage. Now, with a variable rate mortgage, your payments are going to stay the same, but the amount that goes towards interest and principal is going to adjust based on the Bank of Canada's decisions. Now, an adjustable rate mortgage is similar to a variable rate, but with this one, your payments will actually adjust every time the interest rate changes. If the rates come down, your payment goes down. The amount going towards your principal and interest will remain roughly the same. Now, if you understand these differences, it's crucial to determine which mortgage type aligns best with your future financial goals and your risk tolerance. Now, if you're planning to buy a home in 2025, it's really important to recognize that timing the market based on interest rate changes, it's nearly impossible. What you need to be doing is focusing on what's important to you, your financial stability, your job security, where you're at in your stage of life. You need to have time in the market and make the right decision for you and your family. So if you found that perfect home that meets all of your family's needs, it might be better to proceed now rather than waiting for some potential rate cuts down the road. Some economists predict that the Bank of Canada may implement at least 2 more rate cuts by the end of the year, depending on economic conditions. Stephen Brown, an economist at Capital Economics, mentioned that our view at Capital Economics is that it's worth cutting again in June as insurance against those downside risks and to try to protect the economy a bit. These insights suggest that while rate cuts are possible, they will likely be gradual and contingent on various economic factors. Now let's wrap this up for you. The Bank of Canada's decision to hold rates primarily affects those variable and adjustable rate mortgages. Understanding the difference between mortgage types is essential in making informed decisions. Attempting to time the market, it's risky. Focus on your financial readiness and your housing needs. If you're considering buying a home in 2025, consult with a mortgage agent and explore all of your options and determine the best course of action for your own situation. Now, if you found this helpful, please like this video, subscribe to our channel for more updates. For more personalized advice, feel free to reach out to me directly. Let's discuss your home ownership goals and how we can achieve them together. My team and my preferred partners will give you that local competitive advantage in today's real estate market.